It's time for Top That Trade. Joining us for that, Alan Nuckman, the Chief Market Strategist for BullseyeOption.com, and Phil Flynn, a Fox Business News contributor. Ready to go, guys? Round number one, tough Fed love. The market is predicting we could see a record 1% rate hike from the Fed coming up. Does that mean weakening or strengthening of the stock market?
It's tearing off the Band-Aid. It's about the destination, not the journey. We know that rates are going to top out at 3.5% at the end of the year. That hasn't changed. Then they're going to be around 3% for 23, 24, 25, 26, and 27, according to the markets right now. The 10-year note is steady, so the markets seem to like the fact that the Fed's getting more aggressive, and we're getting the reaction that we want with oil prices down.
Yeah, but one of the risks that I'm seeing with this interest rate increase is the differential between the interest rates here in the United States versus what we're seeing in Europe. That
Right.
disconnect does create some problems for the stock market at times. We saw that in 2008 when the prices really got disconnected. We saw a big sell-off in commodities that did hurt some corporate profits for a while. So there could be a rocky road ahead. But I think in general, Alan's right. I mean, 3% interest rate is still at a historically low rate.
Ow.
Just as long as it doesn't get worse. You know, we have to look at the inflation and see if this does cool down. There are signs that it will, but if it doesn't, if they have to go higher than 3% and go a la 1970s and really give you an interest rate increase,
All right,
then
Phil.
you're going to have some problems.
Well, yeah, we would have some problems if it was the 1970s, but the employment rate's at 3.5%. So let's slow down there. But I think the pain now, a sharp pain now, as opposed to a little prick every month and every day, I think that's the way to go.
Round number two, pre-Ukraine unwind. Do you see Dr. Copper doom, or is this just a commodity pullback?
Well, the major consumer of copper in the world is still China, and China is still not hitting on all cylinders when it comes to their economy. Part of that's due to COVID lockdowns. They have a zero COVID policy. It seems like every time commodity prices go up, they have a new case of COVID and they shut down some factories. They shut down the casinos even, so you know it's serious. And we don't know, if that's going to continue or not. We are hearing signs that COVID cases are falling in China. So if they reopen their economy, then copper is probably undervalued at this point. But the other thing you have to look at copper is the dollar. The dollar is on fire right now. Right. That's going to keep pressure on those prices because it's still priced in dollars, even though they use most of it in China.
It's not just copper. Copper's dropped from $4.75 down to $3.25. Wheat's down 40%. Gas has dropped every single day in the last month. Is now down 20%. And we also have crude oil at the $95 level after being at $130 back in March. So this is the intended effect of raising rates to lower prices. Now, we haven't felt it in the CPI or the PPI yet. They're a little bit lagging, so we'll wait and come back. But you can't have it both ways. You can't be worried about high commodity prices, and you can't be worried about low commodity prices. They are what they are. But what's important here is under capitalism, lower commodity prices don't translate to the consumer. Exxon is expected from the Wall Street Journal to make a $25 billion profit this quarter. $25 billion profit. That's
ridiculous. Alan, I can't believe you're saying that. First of all, ExxonMobil lost $25 million, and you have to look at how much money they invested to make that $25 million. And if you look at their percentage of profit, compare it to Apple. Why aren't we screaming about Apple? In their profits, their investment on the dollars are 1,000 times more profit potential than the oil companies. This is one of the biggest falsehoods that are being perpetrated by the mainstream media when we come to these profits, these so-called record profits. Record profits,
that's
the
fine.
percentage based on that. It is, and we're making up for record losses. So if you average it out, they're actually losing money over the last couple of years.
All I'm saying is it doesn't translate to the consumer. The consumers have benefited from lower prices.
To the consumer. Consumers have seen lower prices because higher prices inspire more production. We saw record refining margins because the market's screaming we need more oil. U.S. refiners raised production to the highest level of capacity in over 30 years. And they did a great job. And the consumers are seeing that. Because if it weren't for that effort and that investment, prices would be higher than they are.
Oh, you guys are fired up today. Let's take it to round number 3, beaten and bruised values. Let's take a look at some stocks in the stock market that are down and out. What would be your buy? Facebook, Capital One, Micron, or SPX?
The stock I like on the list is Meta, is Facebook. It's dropped so far so fast. Its PE is still 12. They still crank out money. Compare that PE to the S&P of 16. It's undervalued, and there's a gap up above at 250.
I like Capital One. I mean, right now the consumers have been squeezed with higher inflation. Obviously, they handle a lot of consumer business, but they're also going to be getting higher interest rates. So the higher interest rates are actually good for these banks and the credit card companies. If you don't have a lot of defaults, they're going to end up making money. So I think because of the fear on the consumer being squeezed a bit, their stock was down, but we think the interest rates will even that out. Most of the bank stocks are going to do very, very well in a rising interest rate environment.
Here's your bonus round question for today. I have a good feeling for you guys. Can you name the billionaire who wants to drop off the world's richest list? Is it Jeff Bezos, Bill Gates, or Mark Zuckerberg?
I haven't heard this. I'm going to say Mark Zuckerberg, but I'm just taking a shot in the dark.
No, it's Bill Gates.
The answer is indeed Bill Gates. Always enjoyable. Thank you so much, guys. Great work today. Business First AM continues right after this break.